Hello, everyone. Good morning, good afternoon, wherever you might be dialing in from around the world. Thank you all for joining us for today's webinar, Continuous Innovation, the Journey from Startup to Insurance Market Leader, presented by Aite-Novarica Group and sponsored by OneShield. I'm Michaela Bernier, and I'll be your host for today's webinar. Before we begin, let me just cover a few quick housekeeping items. Today's webinar will be recorded, and a link to view the recording on demand will be available after the session. We will be taking questions at the end of the webinar, so please feel free to submit your questions using the questions feature located in the GoToWebinar toolbar to the right of your screen. I'll now turn the mic over to Stuart for introductions. Thank you again for joining us, and we hope you enjoyed today's webinar.
Well, thank you very much, Michaela. Yes, my name is Stuart Rose, and I am a strategic advisor at Aite-Novarica Group, specializing in the P&C side of the business. I've been Aite now for nearly 2 years, and prior to that, I've spent most of my career in the insurance industry, about half of it for a large global carrier, and then the other second half working with technology providers in helping them their go-to-market strategies into the insurance space. So with that, I'll hand it over to Leah and give an introduction to herself.
Good afternoon. My name is Leah English. I'm the SVP of Sales at OneShield Software. I've been at OneShield for about 10 years, but similar to Stuart, spent my entire career in the insurance industry as well. Jason?
Sure. Hey, I'm Jason Lichtenthal. I'm the Senior Vice President and CIO at Pure Insurance. I've been with Pure for 13 years, so through much of its existence. Pure is my first real stint into the insurance world, and so I did not spend my career in insurance, although the likelihood of me being with Pure for some time to come. And I've played mostly technology roles here at Pure, including as CIO for 7 of those years. I also moved on to the business side to help lead up our member experience and internal consulting teams here at Pure as well.
Well, thank you very much, Leah and Jason. So with that, we're going to probably get into the first part of the presentation. So, like I say, first of all, I'd like to thank certainly OneShield for sponsoring this webinar. And I'm very excited to hear, Jason, about Pure's journey really from, to some degree, I think you're probably one of the first insure tech carriers out there, going back there, and to some degree how you've expanded and come to be now a really leader in the insurance space. But before that, I think the main part of the webinar was going to get Leah and Jason talking to each other. I thought I'd probably just introduce a few of the market and business trends that Aite-Novarica Group believe that are impacting insurers today and really into the next year, 2023, and maybe even beyond that. So each year, Aite-Novarica, we publish our IT budgets and projects report. For this report, we actually survey our CIO Research Council, which consists of over 200 carriers in North America and the CIOs from those organizations, really to understand their IT budgets in the next 12 months and where they're really looking to invest their technologies. Once we get these results, we then tend to segment those into what I would consider as larger carriers, those with revenue over $1 billion, and the mid-sized carriers with direct written premiums under $1 billion. So while it's not shown on this slide, the good news is that the average IT spending ratio has increased from 4.1% of premium revenue in 2022 to an estimated 4.3% in 2023. And again, maybe Jason can later on ask us, see whether he's seeing an increase maybe in some of his budget. But I think one of the things we're seeing is, where are they actually looking to invest that money? And I think really from this slide, this is really what we're looking at. What are the primary capabilities that the business are asking IT to deliver in 2023? And I think this is the really important part, is because quite often it's a business that is driving the IT spend out there. So a few conclusions from my perspective. Certainly, it's clear that the investment in data and analytics really continues unabated out there. And this has probably been the biggest driver for the last 3 or 4 years, even not longer than that. And I guess you could probably even argue now, as that's probably grown to such a large area, we should probably break that down into what they're investing in data, in analytics, and now to some degree AI, and really understand where the business wants to look for improving efficiencies in each one of those areas. Another key capability that the business is asking for is speed to market, whether that be through existing product changes or really bringing new products to market quicker out there. I think one of the conclusions, again, we got from the survey was certainly speed to market for new products is slightly more important for the larger carriers than the mid-sized carriers. And predominantly, I would argue, maybe that's probably being driven by the fact that increasing revenue and market share tends to be slightly more important for the bigger carriers than maybe some of the smaller ones out there. Some of the other things on that slide, I think certainly we're going to talk around customer experience in the next slide, but certainly it's interesting to see the difference in priorities for the customer engagement and the policyholder self-service capabilities between large and mid-sized carriers. And then probably on this slide, when you look at it, the most obvious thing that strikes me is the difference between the importance between optimizing those internal workflows between large carriers and mid-sized carriers. Now, again, there's many factors that maybe come into that discrepancy, but I think even the COVID pandemic, which I think we're probably all sick to death of mentioning and blaming that on everything, but there's no doubt that it definitely exposed some of the deficiencies in some of the smaller insurers' internal processes out there. So, like I say, next topic I really want to talk around it is customer experience, and this really can be very much, I'd say, an ambiguous topic out there. It can mean many different things to many different people. Certainly, or even an insurance company consider a customer as someone very different. It could be an agent, it could be a policy holder, it could be a claimant, or even a vendor, such as a body shop repairer. So customer is a very vague term, I think, from an insurance perspective. But again, here, what I want to share with you is some interesting research, again, we did earlier this year. And for this, we actually didn't just focus on the insurance industry, we actually asked over 200 financial institutions, really if their organization had a clear customer experience strategy out there. We then took that data and subdivided it and sliced it up into the insurance industry. And I think what really struck me when we looked at the results was how much difference there is between insurance companies that have a chief customer experience officer and those that don't. Now, again, you could argue that the results may seem obvious, but again, it begs that question: if customer experience is such an important initiative, why haven't customers invested in an individual or a team that is responsible for that strategy? I think from our experience, quite often, customer experience tends to fall under IT. And again, no disrespect to IT. I know we've got Jason on the phone on this call here, but I don't think customer experience really is their core competency out there. So again, I think if we go in and start looking at some of the trends we're going to see in 2023, I think there certainly will be more of a push in creating a chief customer experience officer. And I think, like I say, Leah and Jason, I think I'm going to talk around this subject in a few more minutes, but it'd be certainly interesting to see who's responsible for customer, or I know at Pure, it's more of a member experience out there. So the last initiative I just wanted to talk around here really is building off that customer experience theme and this idea of continuous innovation. And so another common trend that we're seeing out there is this idea of going digital. So again, we've got lots of surveys out there, and this certainly shows the result of a survey actually we conducted in May last year, which probably now seems like a lifetime ago. And again, from here, we asked over 130 different insurance executives how their company's digital activity and volume had changed since the pandemic had started in 2020. Now, again, the results, of course, quite often just confirms what everyone else is thinking. With over 70% of carriers across both claims and underwriting seeing a significant increase in their digital activity. But I think one of the things I think when I think about digital is insurance companies have been going digital for years. They've taken what I would consider as traditional print documents, whether that's annual statements, billing invoices. They've converted those into PDFs. They've emailed them out to their policyholders, which, yes, that's going digital, but from an end user perspective, it's really not what I would consider as a digital experience. To me, to really transform the insurance business and go from digital to digitalization, organizations have to rethink many of those business practices. Like I said, it means bringing in new data sources, whether it means automating simple insurance tasks. It's using advanced analytics, really determine what is the next best action in the insurance cycle. So again, these are just a few of what the high level trends that us at Aite-Novarica are seeing in the property and insurance industry out there. Like I say, I'm now going to hand it over to Leah and Jason. They're going to have more of a fireside chat on some of the really innovative stuff that Pure are doing from the beginning now, like I say, to being one of the market leaders out there. So over to you, Leah.
Great. I think those are some trends that we will certainly hear about how Pure has used those trends over the years. Jason, can you start by just talking a little bit about Pure? What makes Pure unique?
Sure. So we are the second largest high net worth focused property and casualty insurer carrier in the United States. You're not just a policyholder, you're a member, so we're a member-owned organization. We have two main areas. One is we call Pure Insurance, which is our admitted lines. So that's high net worth, high value homeowners, condo and co-op insurance, personal auto and collector cars, jewelry, artwork collections, personal excess, yachts and watercrafts, flood, cyber, home protection systems. Separately, we have what we call Pure Programs, which is our non-admitted E&S lines, which is dedicated to providing insurance and risk management solutions for our Pure members and other responsible high net worth families with higher risk or more complex exposures that fall outside of the admitted market, especially in high value homeowners, co-op, condo, and personal excess. And we use a network of highly regarded independent brokers, which accounts for about 99% of our premium, and the rest comes from our captive broker, which is Pure Advisors. So we were founded in 2005, 2006 started to ramp up. We wrote our first policy in January of 2007, so about almost 16 years ago. And since then, we've had numerous years at 40% plus written premium growth year over year. We continue around 15 to 20% of growth each year. Our retention rate is about 95%. So 19 out of 20 new members renew with Pure each year. 90% of our members are extremely satisfied with our claims handling. We're closing in on $2 billion in in-force premium. We win a ton of awards each year, whether it's the Family Wealth Report Awards or the Private Asset Management Awards for the past 6 years, winning Best Underwriter, Best High Net Worth Insurance Company. It's something that we are extremely proud of, but also don't sit on our laurels to go and we continue to do what we need to do to go and help service the membership. Right? And we have a purpose of enabling our membership to live their lives to the fullest, to pursue their passions with confidence. And that comes from a couple of major principles, right? Doing the right thing always thinking about the long-term effect of our decisions, balancing the needs of each individual member with the interests of the whole membership, and aligning the interests of all of our independent stakeholders. And so it's been a fantastic ride here at Pure over the last 13 years or so.
Yeah, I think, when you say 95% retention, that's just incredible. And we saw the trends that Stuart was talking about previously about customer experience, in your case, member experience. How does Pure build that brand to elevate the member experience and to continue that level of retention year over year?
Sure. So we do everything that we can do to expand that feeling of membership and enthusiasm for Pure. What does it feel like to be a member? And I think that comes from two main focus areas. One is how our service feels to our members and brokers in terms of being respectful and welcoming. And one is how to make our service smart and easy, right? So regarding how service feels, it's about being empathetic. We strive to be our best when our members are generally at their worst, right? Whether that's a car accident or a tree falling through their home or whatever it may be. To be warm and show gratitude towards our members, to be personal, to service the specific person or situation, and to be insightful, to be trusted experts. And also making things as smart and easy as we can, being simple and intuitive, being responsible, and ultimately being easy to do business with, whether that's for our members or our brokers. And I think that's a big part of why we dedicate a ton of time and resources to thinking about what does it mean to be a member and to improve that member or customer experience.
Yeah, and I'm sure your members have also somewhat contributed to your growth as well. Probably they give you recommendations, et cetera. Can you talk to us a little bit about what your growth looked like? So you were a startup, $0 in premium. How did you achieve going from that to almost 2 billion, as you spoke about earlier?
So I think there's a couple of pieces, that came together really well. Some of that is being extremely selective when it comes to which independent brokers we wanted to work with. Which of those brokers are really going to be able to connect with what we are trying to do and our purpose, and where we feel we have an alignment of interest with those brokers, and there's mutual benefit there. And also, of course, finding those brokers that can sell the heck out of Pure's products. And so that has been key, finding those great independent brokers who can help sell, where we've got a mutual benefit and alignment of interest. We strive to make our product offerings more comprehensive with additional coverages and so forth, and also be more thoughtful about our membership's varying needs and within the high net worth industry. We understand what makes Pure sticky, right? We've got that great 95% retention rate, and we can just double down every time on those things that really work to make Pure sticky. We're constantly making incremental changes along the way, finding those places that cause the most friction in our environments, and do what we can to grease those, the squeaky areas. And we continue to find ways to service the high net worth market, right? Provide more value, or just more to the Pure membership in terms of insights and coverage, and just making them feel safe with their investments.
And so the member is centered at everything you do, but you're the CIO, right? So how did technology factor into your growth, or was that an enabler as a part of that experience?
So I think that there's some we'll call them technology guidelines that we had in place when we first started and continue to have in place today, right? The thought of building scalable systems that are going to enable revenue growth and product diversity, to enable pricing, underwriting, claims, and service excellence, to make all of our systems work like magic, right? But with that said, there's the more tactical pieces that come together. So from the beginning, we decided, right, when it comes to buy versus build, right, we decided to use packaged insurance software, which is custom built for the insurance industry. OneShield being, a key cog in our packaged software. When it comes to best of breed versus full suite, we decided to use a best of breed mentality, to use multiple systems and integrate them together to significantly beat that 80-20 rule in terms of implementing business capabilities. And the strategy has generally met our expectations. Our systems can handle the vast majority of requirements that our business units throw at them. And with that said, we have a large backlog of work to be done as well. And a lot of the work that we do is configuration and integration versus actual building, right? Because our platforms are scalable, and it's all about the APIs, whether it's going to be synchronous or asynchronous, whether those APIs and systems are going to be on premises or software as a service or infrastructure as a service or multi-tenant solutions. Stitching it all together is what our IT team does to go and make all of our systems work like magic.
You know, I imagine when you said tactically, early days, you were tactically rolling out more states, and you were also trying to manage change in the newly launched states. What was your more difficult technology challenge kind of early in the trajectory?
So early on, we did focus on rolling out our products state by state. And so by doing so, we didn't have as much of a focus on consistency, right? And it's called that one of our lessons learned. Like, we want to be quick and react to change, but even more so, right? One of the biggest challenges, right? And I think we've been highly successful in many areas, but one of them was finding those vendors and partners that have an alignment of interest with Pure, who want to be exceptional, who are obsessed with getting better, who want to offer extraordinary customer service. Right? I'd say the lack of those things is what will lead to difficult technology challenges. Right? So the way we went about rolling out our products, right? We could have been a lot more consistent across the board, right? But I'd say the biggest challenge that we wind up seeing is when there isn't an alignment of interest, when there isn't an obsession with getting better or customer service or being exceptional.
Sounds like you're starting to give some advice to the people that are here. I know when OneShield works with startups, we're always trying to give them advice to say, focus on what is MVP for that first release so that you can start writing new business as soon as possible. But we also want them to think about a technology that can scale with them as they grow based on that trajectory that they're planning, and that they've got a consideration for maybe some of the functionality they don't need for launch, but they'll need later in, like some of the deep admin capabilities that some of the platforms support. So that would be our advice. What advice do you give to startups that might be in a similar position you were 13 years ago?
So related to what I said in the last answer, I think there's two pieces. Right? The first big one is to find as much consistency as you can. Right? Don't underestimate the complexity that comes with trying to be extremely precise or narrow or infinitely specific. With that said, some differentiators can be well thought out without impacting the speed in which those things can be implemented, but being as consistent as you can, thinking through things consistently, and that leads to patterns. Right? It's okay to have some complexity if you can see a consistent pattern that defines that complexity over and over again. For us, it's across lines of business, across US states, finding those patterns, and it will allow us to reduce complexity even with multiple variables that we're able to create as differentiators across state and across products.
Yeah, and I imagine that IT can be quite helpful in determining kind of some of those patterns as you talked about. You talked about early days consistency is a challenge. What does that evolve today, or are you kind of seeing the same thing in your current problems that you're solving, patterns you're seeking?
I'm fortunate to have seen a lot of Pure's evolution from small company to mid-size, and as we move past 2 billion in written premium. In many places, some of that evolution is going back and refactoring or redefining, or sometimes even replacing those areas where we might have missed on, the target of some of those technology guidelines that I mentioned before. To give you for instance, as a small company, it was really easy for an underwriter to kind of swivel their chair and talk to the person, the peer, the manager, executive on their thoughts on a particular risk or how to go about making a decision. And I'd say what at Pure we'll call simply decision support tools, that's become a necessity that we might not have felt as strongly about early on that we feel much stronger about now, giving people the tools they need in order to make good decisions. We also have much more in our evolution come together as a company to recognize that sometimes it's okay to work on initiatives that aren't as glamorous or as transformative as some would like to see, but is essential for that evolution of a company moving from small to mid-size to large company.
So we've talked about how you've had to evolve as an organization. What about IT? Has that grown? What does your team look like today to support all of this?
I'll make the argument that we're a relatively lean team. With that said, our suite of applications allow us to be self-sufficient. One of the things that has changed is recognizing we need to be much more of a 24/7 technology organization to keep systems up and running. Right? Finding ways to handle issues as they arise while remaining lean can be challenging. And it requires our evolution and our thought patterns to change as we move to a more robust organization.
Yeah, Stuart mentioned that earlier. Does that impact budgets as well? Trying to be that 24/7 support, and I mean, even the ecosystem that you're enabling.
Yes. So what's interesting is every time a department wants to tighten its budget, IT needs to spend in order to enable them to tighten their budget, right? And so the goal is pulling all the levers across the organization, right? How are we going to not allow each underwriter to take on 10% more throughput? How are we going to help our claims adjusters do their work more efficiently? And often that comes with some IT spend. And so there are levers that we continuously push and pull to make that happen.
Yeah, that's great. And I think you just talked a little bit previously about the best of breed approach that you took to your admin systems and the solution, the platform that you've enabled there. But you've even built a more successful ecosystem leveraging your third-party partners. A lot of times when we talk to carriers, they think about they're using that ecosystem to drive what they term innovation, which I think Stuart was starting to talk about in the trends. Is that how Pure thinks about innovation? And how do you leverage that ecosystem?
A little bit. I think whether it's luck or intelligence, we found the right foundation to be able to add in third-party data, to be able to add in external technology when it makes sense for our business. I prefer not to rebuild those things where other people who are the experts at that particular niche we're able to integrate with. And I'd say at Pure, we try to solve the real world problem one at a time. Right? We don't go out and just try to find solutions and then figure out which problem that solution might solve for. We try to be very practical. Right? We don't have a large innovation team who's trying out 100 different technologies, where a small percentage of which actually comes to fruition. So we've got to be really tactically smart about when we're going to innovate and where we're going to do so.
That's great. And we're here together today, as you said previously, since OneShield's been a part of that ecosystem as your policy administration platform for 15 years. What do you think are the factors that drive the longevity of that relationship between our organizations?
So to put it simply, I don't think we'd be where we are today if back in 2005, 2006, when thinking about how to put this company together, if we had chosen a different tool set, right? Our OneShield policy platform has been in several different ways crucial to Pure's growth, right? Our ability to, right, and this will go for anyone, no matter what your policy system or billing system or so forth might be. right? Your ability to configure and adapt it as you see fit to try to significantly beat out the 80-20 rule is important. The ability to extend your platform to third-party tools and black box processes for other experts to be able to bring them in is important. The ability to tweak the system as needed has been very critical to our success. And like I said earlier, finding those partners that have an alignment of interest with Pure about being exceptional and obsessed with getting better is important. And there have been times where we wound up moving away from companies and products that failed to live up to that part of the agreement.
Yeah, and a company like Pure is critical to the product roadmap at our organization as well. So I think if we pivot to kind of that last trend and maybe use this as a jumping point back to hearing from Stuart and some of the Q&A, now that you are a market leader in the high net worth space, what are your innovation plans on a go-forward basis? So we've talked about the past and current day. What's the future look like for Pure?
Sure. So I'll kind of jokingly say, we want to create a non-disclosure agreement signed by everybody on the call. I'm happy to discuss everything in detail. With that said, in short, kind of our future innovation plans revolve around us living out our purpose, right? Of helping our membership live out their purpose, right? To make everything work like magic, right? To give all of our stakeholders, right? Those, whether it's members or brokers, underwriters, member services, customer service, claims adjuster, etc. We need to give them the information they need when they need it so they can make informed decisions throughout the ecosystem, right? And those decision support tools are going to be a big part of it. So when it comes to how we plan to innovate, how we innovate our systems, a lot of it is going to be around decision support for everyone, including our members, to be smarter about what they're insuring, why they're insuring it, and how to make sure that their assets are as safe as possible.
That's great. I'm sure everyone was interested to hear those lessons that you've learned and how you've evolved over time. Stuart, do you want to talk a little bit about any trends that you see in terms of differences in startups and established insurers?
Yeah, I'm happy to share that with you, Leah. And like I say, I think to some degree, I'll argue that's quite a tough question to answer out there. I'm not sure there's ever a right or a wrong answer, but I think when I listen to what Jason was saying, I think when you think of a startup, one of the things that they certainly need to do is certainly have that flexibility. They need to be lean. I think, but most importantly, I think the point that made when you look at the buying trends of a startup is that ability to scale. Because really at the moment you're starting from nothing and you've no idea how big, how quickly you're going to grow up there. So when you're looking at new technologies, you need to make sure that they can scale and they're going to be able to support your business, whether that's in 12 months or whether that's in 12 years out there. Like I say, and I think the way that I tend to look at it is, you think of the analogy of building a house. When you've got a startup, you don't have any infrastructure there at all. You can build it totally from scratch. However, if you build it on a patch of land that is not big enough, when you've outgrown that, what do? And then when you look then at the trends really of existing carriers, I think they have the opposite restrictions and challenges in the fact that now they're having to work around those constraints of existing technologies out there. As many of them look to transition and move to the cloud, how are they doing that? Because some of these legacy on-premise solutions just don't work on the cloud out there. So that gives them the additional headache of that. So they may not have the problem about scalability, but how do they bring some of these new technologies on when they just really don't talk together from the on-premise to the cloud solutions out there? So that to me would be, I wouldn't say it's a high level differences. I think the business opportunities for startups and established customers is still very much the same. It's how they go about deploying those technologies is the different challenges out there for them.
Hey, Stuart, so very much related to what you just said, I both lovingly and jokingly call Pure's evolution in 4 stages, right? We started with fast, get up and running as quickly as we can, which immediately led into stable, making sure our systems can continue to run properly, that we are covering properly, that we are billing properly, and so forth, which then led to scale, right? Making sure our systems can support the level of business as we continue to grow. And finally, moving into a little bit more of innovation and product availability, right? How are we going to innovate to be able to meet the needs of our membership? So very much those first 3 phases very much tie into the point you just made.
So I'm going to follow up now and go, so what do you prefer being? Do you prefer being the startup, or now to some degree you're that established player out there that's having these additional headaches?
Me personally,
yeah.
Mind you, I love getting my hands dirty. And so as we continue to grow, that becomes less and less possible. I will, again, somewhat jokingly, somewhat seriously say my team would prefer me not touching any code. But with that said, I'm somewhat of a technologist at heart, and I'm a problem solver at heart. And so we continue to have challenges, which is why I continue to be here. Right? In my career, this is my 3rd company that I've worked for out of grad school. And when in those first 2 companies, when I felt I couldn't make as much of an impact, it was time to move on. And here I am 13 years in, and there's so much more of an impact to be made at Pure for the membership, for our brokers, for our employees. There's just so much more to do.
That's
Great to hear.
Michaela, is there any Q&A from the audience that we want to discuss?
Yes, we can get into it. This question is for Jason. Have you had to replace any technology as you grew as a market leader?
The short answer is yes, for sure. There were, whether it was because the product or even the partner we were working with didn't have that alignment of interests, or maybe in some products we grew it, right? So we have replaced systems when it made sense, but for the most part, we try to do everything we can during product selection to ensure we've got that scalability. We're actively replacing our reinsurance system. We replaced our billing system a couple of years ago. We had purchased a manufacturing insurance system, a billing system that we bastardized in order to make sure it can run an insurance company. And it was great. It worked really well, but we outgrew it. Right, and so that has to do with some of the scale, the thought about scale. What is it going to take to scale the company? And so we knew we needed to replace our billing system. The same thing with our reinsurance system. But we have partnered with lots of companies that do specific things really well, right? Third-party data providers, black box solutions to a particular task in our workflow, which has been really important for our growth.
Great. Another question we have is, Jason, I think you could answer this one as well. How do you manage cultural change? Are you still able to maintain your startup roots?
Oh, that is a tough question. It's one that we talk about quite a bit at the senior level here at Pure too, as well as amongst ourselves, right? Creating employee engagement groups and so forth, where you were able to create that engagement again by just swiveling your chair. It's very different now, right? So kind of the short answer is, managing cultural change and the movement from small company to mid-size and mid-size to larger is a struggle. What we do, what we can do is keep our core tenets in place, but recognize with growth comes changes that are required of us in order to be able to scale, right? So for instance, in some places, we'll call it the art, right? The art of underwriting, the art of insurance. And some of that will still be in place, but we need to move a little bit more towards the decision support area. So the science, of what we do in order to get some level of consistency. But not being able to have as easily what I call the water cooler talk, right? The ability to see somebody in the lunchroom, somebody you don't talk to all the time, and whether you're talking about kids or whether you're talking about activities or you're talking about the latest problem or the latest challenge you've got, it becomes much more difficult, especially in the post-COVID world, and especially when moving from small to mid-sized to large companies. So it is definitely a challenge that at Pure we think about often.
Great. We are getting lots of questions, so let's just roll through them. The next question, also for Jason. How do you approach customer experience when in the H&W field, your customer experience may be experienced by a family support staff and then others will be handled by the family? So you may be using two different personas using the same features. Sorry, my apologies.
All right, so that is definitely a challenge, right? It's a challenge. I'm going to take it out of the insurance world for a minute. Netflix and other long time, solely technology companies are just starting to solve that, or have more recently solved that problem with profiles, right? You log into Netflix, you can create lots of profiles for it, right? And so seeing things through each of the different lenses is a challenge, right? The technologies each might be more used to using might be different. We try to create a more consistent experience amongst all of our stakeholders, but there are, different systems that need to be integrated to make that all work together. So even recognizing and building the data support to be able to know that these two people are related, or this is my accountant who I want to have access to my system, or this is my, the manager in a family office who's managing a number of families and a number of Pure family members all together. It's a piece that we talk about, again, pretty often. It is something that we will address, and we have addressed in some ways, but we have, I will readily admit, Pure has a ways to go to be able to handle the notion of there's many people who need to be able to interact. And how do we get the approvals from the member, who's the ones kind of signing our subscribers agreement on the dotted line, and make sure that they're in agreement that these other outside entities can work on their behalf. So we talk about it quite a bit. We have not directly solved that challenge just yet. Like I said, we've got a ways to go in a number of different areas. With that said, we've been incredibly successful in making sure our members are safe and secure with their assets.
Whoever asked that question must know your space a little bit.
Yeah, I like to build off that a bit, because I think that to me, I think it's a fascinating subject of, to some degree, it's who you know your customer to some degree, and bringing data in there to understand how you interact with them. But I think that Jason seems to hit on the head that they're really trying to understand is who has access to the data, because we did some research last year and we were doing around some of the identity theft aspects out there. And I was actually fascinated by how many people were doing this account takeover area and how many of those were actually associated and links with family members. So it's really important to make sure you have the procedures in place to be able to not just simply give access to anyone out there.
Great, thank you, Jason. I have a couple questions for you, Leah. First, do you see differences in the technology expectations or business requirements of a startup or an established insurer?
Yeah, I mean, I think that Stuart and Jason certainly talked about some of those previously. What we see is that the startups tend to be focused on time to market, as I think Stuart was referencing, and then they're really in tune to what differentiators they expect for their launch. So whether that's their product, or if it's the customer experience, or it's something different. And then when it comes to their business requirements, they know, okay, yes, these are our business requirements for that differentiator, but the rest of their functions, they're not as clear on. So they're really gonna rely on the vendor to say, okay, this is standard insurance functionality in that space. I think that's kind of an important piece for startups specifically. In contrast, established insurers, they're the ones that are going to come out with really detailed RFIs. They're going to want scripted demos, and they're going to be trying to look for solutions for all of their pain points. And that might create competing business requirements because different divisions handle it differently or different departments. So I think that's certainly a challenge that established insurers have to think about. What is their goal when they approach this project, and have that be their North Star that kind of guides them through the process. And then lastly, I think one other interesting trend that we see within established insurers is that some established insurers are thinking, how can I take new projects or new initiatives and treat them like a startup? So they can struggle with that because of what I just talked about in terms of the existing practices within their organization. But when it's done right, it's a great way to sort of spark innovation within that traditional business that they have.
Great, thank you, Leah. We've also gotten this question a couple times. Which platform of OneShield is Pure using?
Yeah, we're using their enterprise product, right? And Leah will be able to discuss some of the differences between them. But especially at the time back in 2005, 2006, when we were going through product selection, right? It was solely OneShield policy in their enterprise product. But for Pure, we needed a ton of flexibility as we were going into multiple products, multiple states, with tons of custom built integrations. So for us, enterprise was and is the kind of the solution for us, but there's definitely pros and cons for when you're going through product selection.
Yeah, I think another interesting point too that Stuart made earlier is just the piece about being cloud native. And we think about Pure's evolution, right? You were on an on-premise version at the beginning. And then given that we're cloud native, OneShield supported you in that shift to the cloud, and now you host it on your own. So you've really been able to take that journey over that period as well.
Yeah, I mean that evolution, and we're undergoing the third evolution of that, right? It was from total hosting the solution to being more self-sufficient to kind of moving to the cloud, right? So there's the cloud, and then there's multi-tenant cloud, right? So while multi-tenant, again, we're talking kind of philosophically, multi-tenant cloud should be coming with significant cost savings. But with those solutions that we have with multi-tenant cloud, we haven't found as much cost savings as we would have thought. And there aren't that many true multi-tenant, right? Infrastructure as a service, tons of multi-tenants, but software as a service, there's just a few handfuls. So for the most part, when we move our hardware to the cloud, whether that's AWS, Azure, or whatnot, that's the way I see cloud, and we try to keep our infrastructure costs low, right? Especially in terms of the number of people we need to maintain these systems. And so we go out to partners who can go and help us maintain our systems as best as possible. We have an internal team who is fantastic at being reactive, but we don't want to have a massive infrastructure team, right? So having a multi-tenant cloud would be fantastic. Sometimes it doesn't. I haven't seen it always achieve the goals that we would have seen. From an infrastructure as a service, we've seen tons of value in terms of being able to scale, in terms of being able to react faster, in terms of if we need more memory or more disk, or spinning up an extra server or a load balance server becomes much simpler on the cloud than going and trying to procure hardware and putting it in a co-location facility. I hope that somewhat answered the question.
Great, thank you. Lots more. So this next one says, as a startup, what is more important, ease of use for the employees, or having all functions automated? Everyone want to take a stab at that one?
Or insurance. I don't know. I don't think I'd be able to compare which is more important.
Yeah.
For the most part, to some extent, trying to automate everything becomes difficult, right? There is, for sure, the art, right? The art of insurance, within insurance, the art of underwriting, the art of claims management, the empathy you need when somebody's at their worst. So key touch points and making those things that you want to automate work like magic, but making those key touch points valuable as well are important, right? And so finding the right balance of what you want to automate and why. So again, for Pure, it is incredibly important for us to be able to reach out and be with a member when they want to be met with, right? And for all of our digital experiences to work like magic as best as possible, and find ways for when they no longer want it to be a digital experience, to make that transition work like magic, to go and make it so that they're getting their answers to their questions the first time they ask.
Yeah, I'd like to just build off that a little bit. Like I say, I think I loved it earlier on, Jason, when you said that, when it's your mission statement, but like I say, Pure's idea is you want to be there. Like I say, I can't remember, what is it? That's for our members. You want to be at your best when your members are at your worst. I love that quote out there, because I think it's very true. It's like, most people don't tend to interact with their insurance companies too often. When they do, it's at time of need. And like I say, there's a lot of conversation around automation, but you can't automate a claims process too much, because it is a very complex process. You need to some degree have that human touch interaction as part of that process. So I think to some degree, going back to the original question, I think it is the user experience, but I would say it's the insurance experience. Insurance experience is both the external users as well as your internal users, to make that as efficient and as effective as possible.
And there's also multiple stakeholders involved. At its simplest, we've got Pure and we've got our brokers, right? And so finding the balance between the two also, to make sure the right person's answering the right question, the questions at the right time, is part of the ecosystem that we need to build out.
Great. So another question is, considering, Jason, this one for you again, considering what you know now and what you have learned along the way, is there anything you would do differently from the early days?
Yeah, I mean, again, I will reiterate one of the things I said earlier, right? Trying to find a way to be consistent and trying to find a way to get our business units to think about consistency, right? Whether that is thinking about terms in, here's all of the features that we want, and here's all of the US states, and trying for each of those features, trying to make them as consistent as possible. And it's okay to have variability, but to be conscious of that variability so you don't overcomplicate things, so you don't create spaghetti code which calculates things differently, or variations on a rating algorithm that no longer ports from one US state to another or one municipality to another. Creating that consistency is incredibly important. And again, it's hard for me to undervalue, right, what it means to find good partners. Right? Whether that is a product partner or an implementation partner. Finding ones, right? One thing that I see often is you can go to a large consulting company, or you can go to some small podunk consulting company in the middle of nowhere, but any one of those who has that one person who can help you solve your challenges, right, that's the person you want to seek out and find. And it is challenging, but those that will enable you to meet your business needs and meet the needs of the business, that is finding more of those people is something I'd spend a lot more time doing.
Great, thank you. I think we have time for one more question, maybe two. See. What sort of initiative approaches are you taking to speed up production changes? Are you exposing self-service capabilities to your business partners?
So the short answer is yes, and it's very important, right? It's a much longer answer there too, right? So it depends upon to whom we're looking to do so. And again, with 99% of our business coming through a highly respected independent broker network, we are, again, very respectful of what our brokers do and their incredibly important role in the insurance ecosystem. So finding the balance by where we should be reacting and our goal is to help our brokers react, right? To provide values to the brokers themselves, to give them the information they need, to be able to predict when a member is going to call and why, and to give them the information they need on their screens as quickly as possible to be able to answer those kinds of questions. I'm not sure if that directly answered the question though.
But don't you think too, do you look at like the data or the frequency of how often these transactions occur? Because I think to your point earlier about, what do you automate as a part of that? Sometimes, back to the decision science, understanding what's the frequency of that and how often that occurs can really drive some of the decisions. I mean, you don't have unlimited IT resources, right?
Sure. So, and it was one of the slides that Stuart put up talking about the difference between companies that have CCXO versus not having a CC, right? What we call our head of customer experience or head of member experience. So we have a member experience team who has analytics capabilities, who is interested in what comes out of Google Analytics, who is interested in the use and why people use our member portal and our mobile app, how they use it. Our member services team and our member experience team spend a ton of time analyzing call data, analyzing email data to go and figure out where are those biggest friction points that we can go and help solve as quickly as possible, some of which is solved technologically and some of which is not, right? Some of it is maybe a process, some of it may be just getting some information into people's hands so they can solve those questions quicker. So not all challenges need to be met with a technology answer, although there's plenty of places where it does, and our member experience team is all over that, making sure that they are watching what's going on and helping our business slowly but surely, incrementally innovate our digital experiences.
That would be an interesting webinar.
I was going to say, I'm glad that you have a member experience officer. I also think that when you look at some of the data, like so you say, technology is not always the answer. I think sometimes you have a hypothesis where it is problem. You need the data either to prove it is correct or it is to actually find out, it isn't as big an issue as what maybe it was one or two people that complained about it, and they're an anomaly out there.
Great. Thank you so much, Jason and Leah and Stuart. I think we will end it here because we are almost at the top of the hour, but if we did not get to your question, we will reach out via email after the session. Thank you so much for joining us. And thank you all again, our panelists.
Thank you.
Have a great day, everyone.